Hey traders, this is Blake Morrow with Traders Summit, and it's Friday, and I'm with Jim Welsh from Macro Tides. Good to see you, Jim. Hey, we're ending the week. We're at the highs of the week, and how do you feel about that? Now, I have to remind everyone, and yourself included, that a few weeks ago we were near the highs of the week around 4,200, just shy of 4,200. The market rolled right back over about a few weeks ago. So, what are we doing here? What are you thinking?
Well, again, when we talked last Friday, the S&P was just coming off its lows, just under 3650. And in our conversation, I said, my belief here is we're setting up a rally to 3850 to 3900 on the S&P because we had completed 5 waves down. So that suggested a rally. The market was really oversold. Sentiment was very, very negative.
Yeah.
I thought that interest rates were actually going to come down. So far, all of that has kind of transpired this week. So I'm not surprised at all, since this is what I was kind of looking for.
But you have and rightfully so, but we are just shy of 3,900 in the S&P. So I guess the question is, and I know we're going to get into your charts here in a second.
Yeah.
Do you think this is it? I mean, this is like, do we roll into Monday and just sell a rally on the open, or do we try to, see if the squeeze might manifest into something a little bit greater? And again, we're going to get to your charts.
Yeah.
Right off the top of your head, what are you thinking?
Yeah. Well, I think there's going to be some follow through.
Okay. All right. Well,
and the other thing that's happening, Blake, is end of quarter.
Yeah.
So stocks, this quarter have not done well, worse than bonds. And so there's potential rebalancing where money shifts away from bonds into stocks. There's a rebalancing of the Russell 2000. I think all those factors can help levitate the market and potentially a little bit higher and so forth. So
let's talk about your first chart you brought for us is crude. And the reason why I wanted to talk about this is because I'm a little perplexed here, Jim. We have this rally in crude, and I don't know if the market is seeing that as a good thing or a bad thing. Do we as participants go, well, okay, crude's rallying because things are a little bit better in globally, and the consumer is going to pick up again because we're seeing commodity prices, disinflationary pressures come throughout the markets, but crude's going to stay elevated here, or what do you think? How do you feel about crude right now?
Well, the first thing I think is the decline from 122 down to 103, 104, whatever that was. I think a lot of people are looking at that two ways. One, it's a reflection of market recognizing that we're going to see a global slowdown, and more World Bank, IMF, other folks are downgrading GDP growth globally, which means less demand for oil.
Everybody's base case right now is recession, right? So,
yeah, and ironically, I'm not in that camp still. I think we're going to get close, and there are some people, Blake, and this I think is important. People stake out a position and then they look for data that supports it, right?
Sure.
And so guys that have been talking about recession for months, and they'll look at the first quarter GDP and say, oh, that was negative. And if the second quarter is negative, oh my God, that's technically a recession. Yeah, but in the first quarter, all the numbers other than trade were very strong. And the thing that made the first quarter GDP negative was a subtraction of about 3 percentage points from GDP because we had an all-time record high trade deficit. But if you looked at consumption and everything else, but the point is people have an axe to grind sometimes. And I think this is one of those situations where there's a group of people that want to be the first one on the block to say, yeah, I told everybody the recession was coming. So anyway, I'm not in that camp. But again, the decline in oil, I think reinforced ideas that, okay, things are going to slow down. And then I think this week what also took place is people beginning to say, wait a second, oil's coming down. That must mean the Fed maybe won't have to raise rates as aggressively as they've been talking about. And I think that has been what has been taking hold here, is the belief that maybe the Fed won't go 75 in July. They won't raise it to 3.4 by the end of this year. And I think that's why we're seeing the bounce in the stock market. We've seen treasury yields come down fairly rapidly from almost, I think 348 on the 10-year to 304. I think, no, it was just above 301. So anyway, what I show on the chart here is we came down to this obviously trend line. We're getting a bounce. Could it bounce back up to 110 or so? Yeah. The underside of the trend line above there. Yeah. I think this is the beginning of a topping process in oil where you get a bounce, and then I think it's going to roll over again. And once this rising trend line is taken out, you see the horizontal trend lines near the mid 90s. I think there's a decent chance between now and the end of the year, we'll see oil trade down to the mid 90s.
All right. So, well, you were talking about yields, and you brought the TLT chart. So how do you feel about this?
Okay, that green arrow there is on June 16th. I sent out a special update, weekly technical review. It said it's time to buy TLT. I think a rally towards 119 is likely, and possibly 125, 126. So we discussed this last week. And I reiterated my belief that we had seen 5 waves down from 155 in TLT. The bounce to 119.74 was wave 4, and the lows that we saw was wave 5. A rally back to 119 and change would be, going back to wave 4 a lesser degree. So again, I think we're going to see Treasury yields continue to work their way lower in coming weeks. Based on the price pattern. And I also thought, hey, we're going to get more evidence that the economy is slowing, and that should be supportive of Treasury yields coming down. And, so far that's been playing out, and I expect it to continue.
All right. Well, we talked about, briefly about the S&P, and you said, hey, well, the S&P is going to get to 3,900. We're basically there. I mean, even at the time of recording, we may be at the highs of the session, but we're basically at 3,900. So what do you feel? How do you feel about the S&P? And again, I'm gonna throw this question to you.
Right.
We just, Monday morning, we're probably going to end up gapping up if we can close at these levels. Do you sell into that strength and look for another move down, or do you start playing the S&P back to the long side and look for a move maybe, up, around the 4,000, 4,200, something like that?
I think there's more upside, as I said previously, coming on the S&P, Blake. That green arrow, again, is when you and I were talking last week. And I said, hey, I think we're going to 3,850, 3,900. Now we're there. You can see I have an indicator, MACD on RSI. And it just, to me, is cleaner than just the RSI all by itself. You can see now it's overbought. And you can see how back in late May, it got to kind of where it will be certainly by the end of today, where it's overbought. May,
over here.
Yeah, right there. And the market didn't roll over immediately. So I think something similar can play out here where it holds up, the market holds up, and it tries to push a little bit higher. Can it get to 3,950? Of course it can do that. So I'm looking at this again as more likely we're getting an oversold bounce. We've gotten some news that, get people thinking, hey, the Fed won't tighten as much. I think the Fed's going to lean against that in coming weeks. And earnings estimates still have not been marked down. So I'll have more confidence that a low is actually in place if we see earnings get marked down and the S&P doesn't go to a lower low.
All right. And that's something that you've been mentioning each and every week that's like the kind of the next shoe to drop. But, you brought up the Qs here. This is a pretty big breakout in the Qs. And just based on the chart that you're showing me, there's a lot of gaps that look like they can be filled here.
Yep. Yeah. No, again, I think early next week, my expectation is we'll see some follow through to the upside. At the same time, once this rally, runs its course, and it could persist into early July. I mean, you've got, like I said, end of quarter, money flows the first couple of days of July. So could it, go up to that green trend line? Yeah, it's possible. I mean, again, my goal was identifying a trading low. We're getting that rally. And now my idea is that, all right, if you bought near those lows, you got to start looking for signs that this thing is running out of gas. one of the things I do, and maybe I'll show this next week or sometime, I do a 21-day advances minus declines oscillator. And when it gets down to minus 400, you're typically at a decent trading low. We got to, I think, minus 550 a week or so ago. So really oversold. By the end of today, it'll be about near zero. So my point here is that this rally was in part driven by how oversold the market was. And obviously the rebound we've seen, especially today, is going to unwind a lot of that oversold condition. So yes, we can see, I think, more an extension to today's rally and the move up since last week. But I'm of the mind that, okay, I'm looking for the exit at this, at this point in time, sometime early next week, because I think there's more challenges coming, from the Fed, earnings revisions, and economic data is going to, I think, continue to show more weakness.
So short term, you think that there might be a little bit of gas left in this rally, but you're going to sell into strength is the way I'm reading your
looking for an exit
commentary.
It was okay. When we were at the lows late last week, I thought it was an entry point to go long. And now it's like, okay, it's been a heck of a move. And it's time to start thinking, I think, okay, finding where the high is. And what we saw in late May and early June is we made a high and then we started chopping sideways. I think something similar could play out as we go into the end of the quarter, where you don't reverse hard immediately. You start doing some chopping, and that would be the most likely outcome I would expect over the next week.
Okay. Well, the next chart you brought is the dollar, and the dollar has been, kind of consolidating near these highs. But one of the things I have to mention about the dollar is, we're struggling every time we hit new highs. So if you're chasing, momentum and you're like, oh, well, I'm going to get long because the dollar's hitting new highs. You've been sorely mistaken every time you've done that. You chase the market higher, you either get a consolidation or pullback. Is that going to be the same way here where we hit a new high and we're going to get a pullback maybe to this trend line? What do you think?
I'm looking for a deeper correction in the dollar.
Okay.
Look at the bottom panel. That's the RSI. So you can see exactly what you were just talking about, how we made a higher, we made a high in, looks like mid-May, that initial high at around 105.
Right.
Pretty hard below 102, and then made a new higher high a week ago or so, 8 days ago. And the RSI was really diverging negatively. From a price pattern standpoint, to me, you got 5 up here. So I'm looking for a pullback. Last week, I thought you might have one more little tick above that high. Didn't happen. We immediately rolled over. But the emphasis I tried to put was that we're nearing a high in the dollar, a low in the euro, which we'll talk about in a minute. And my expectation is sooner or later, we're going to that lower horizontal trend line, which is at the wave 4 of lesser degree, the 101 and change low we saw about 2.5 weeks ago. That's my first target. And at some point in time, if that gets taken out, then we're talking more like 199.5. And I think there's that potential, Blake, to develop. The U.S. economy is going to slow. And I think people are going to anticipate at some point in time, the Fed will dial back the magnitude of rate increases. And that's my base case. The one thing I discussed in this week's weekly technical review is Chair Powell has talked consistently about how great it was in 2018 when the economy was growing and wages were growing strongly, especially for lower income people. He said, I'd love to get back to that. And he's used that phrase multiple times. So my point is at some point in time, we're going to see the economy slow. We'll start to see unemployment tick a little bit higher, and inflation may not rapidly come down toward their 2% target. It's got a long way to go. When push comes to shove, I think Powell and other people on the FOMC will give the benefit of the doubt to the labor market. In other words, hey, we're starting to see stresses in the labor market. Yeah, inflation isn't coming down as quickly as we'd like, but we don't want to put millions of people out of work. And at some point in time, I think as we get towards the fall, that is going to be an option. Now, the Fed, in order to downshift, they need to see things like the economy slowing. In the first week or so of July 6th, you have the JOLT survey. July 8th is the employment number. Those are, in my opinion, really critical numbers because it's a reflection of what's starting to happen with the labor market. The jobs number more than the JOLTS, because the JOLTS is like a month behind always. So those are the things that I think are setting up. And as we get towards that time, that to me would be one of the reasons why we would see the dollar correct more. And the ECB is obviously going to ramp up their rhetoric and actually start taking some actions. So here's
and that cues us for the euro. The euro's been consolidating below 106, and even today, even with the dollar move, you know, the euro's struggled to get above 106. But what do you see with the euro here?
You know, over the last month, you know, when it got under 104, you and I were like, okay, it's time to be a buyer of the euro. When it was up 7.5, it's like, time to take some money off the table. And as I said last week, on weakness, I think the euro should be bought, because I do think we're going to get a greater correction in the dollar. And I think the euro is going to rally to 107.50, back to that 108 level at a minimum. Now, can it break out? That to me is the real test in terms of how much higher can it go. But at a minimum, I think the euro is going to make a move to the 107.50, 108 level. So,
okay. And you know, that sets up with, I mean, realistically, you have possibly a double bottom, you have a slight higher low. And, you know, if we take out the 108, that really would measure a pretty decent move, wouldn't it?
Yeah, it would. And the other thing, the RSI, you know, it's the opposite of the dollar. You know, the dollar's making higher highs and the RSI was declining. Look at, as the euro was testing that prior low, the RSI, you know, diverged rather, you know, significantly. Yeah. So, and I just think if it pulls back towards 104, in other words, just be a buyer on weakness, and the stop is under the most recent low. I don't think we're going to take that out.
All right. Well, Jim, I love how you put the technical view with, you know, the macro backdrop. So as a trader, how do I follow your work more closely? Not just listening to this every Friday. And by the way, if you're listening to Jim right now and you appreciate his work, give him a thumbs up and subscribe to the YouTube channel so you don't miss any of these exclusive Friday interviews. But Jim, how do we follow you as a trader?
Macrotides.com. And as I do when we have these conversations, it's the faithful listeners of Trader Summit and our videos or YouTube videos. I'm happy to send the most recent weekly technical review. And in this, as I said, I discuss some of the, if you will, the game behind the game. The Fed's got to talk tough, but I think ultimately they're going to be swayed by protecting the labor market more than being impatient about inflation coming down. We're not there yet, but I do think it's important to understand that will push the Fed. And in the most recent weekly technical review, I discussed it. Jim Welsh Macro at Gmail, and I'll shoot you out that issue.
All right, Jim. Well, thank you for your time. I always appreciate our Friday talks, and I hope you guys and gals at home, at your offices, your home offices, do as well. So make sure you give Jim a thumbs up. Jim, I'll see you next Friday.
You got it, buddy. Thank you.
Thank you. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.